All right. Good morning, everybody. Market didn't fail to do its wackiness. That rally at the end of the day, things were down. We had lots of little patterns going and looked like lower. And we open up this morning with more. Can you believe it? More banking news. Credit Suisse dropping like a rock. And so now, where's it going to stop? So I would assume initially, so let me back up a little bit. It's down here. You can see with factory work. The cursor is down here near the low from a couple of days ago. So, well, obviously we're going to see what's going to happen here. And I'm just looking at what the hell this is, a Facebook user. Hello, I don't know if that's a whatever. Let's see what they do. I'm talking about something on social media. Anyway, so it's gapping down here. Obviously, it's gapping down here. Now, we've already kind of used up that area by coming down here, falling from, the roof down and hitting the pavement, and we got a bounce and bounced up to minor resistance. Pretty weak bounce. Maybe it could have gotten a little further up here and it didn't. So I say it's weak, and you can see where it bounced up into this pivot high on the hourly chart and this minor resistance that we went over yesterday. No sound? You guys hearing me? Okay. Yeah. Okay. So Andrew. Okay. Thank you, guys. All right. So in the green room, someone couldn't hear. Sometimes I don't know what goes on there. They need to refresh or in and out, or maybe they had not such a great sleep and the computer's muted. They don't realize. I don't know. So back to our thought process here. Gapping down and weak. Okay, makes sense after a drop like that. So where I was going with this is that we can't count on this area as being something strong at this point. It's already been tested or used once, so its effectiveness as a reference point has been diminished by coming down here as it did, and we got the bounce, and now prices are down here again. That aside, this is still a prior reference point, obviously. So current reference point. Let's just forget about this for now. Will it hold here? I don't know. You can see these pivot lows here, and it ain't getting up. It might, but look, you got 1, 2, 3 pivot lows here, and so far no ability. It's creating support, and it's not being able to move up. Probably waiting for the open to do whatever it's going to do, but this doesn't look good. Right, the weak retracement, and now the gap down here. So far, an ability to move back up, counter trend rally for scalps since it went sideways like this, right? So this is a pretty good setup for a counter trend rally, but what we look for is, okay, here's a red bar, and red bar ignored, it flips back up again, and then you get a little turn up to some resistance area, and we see what happens. The longer it spends time down here and can't rally, it begins to build some resistance or supply area that moves prices to the downside, and why I titled today are continuation patterns in your trading plan. Because at the end of the day, depending on, how much selling continues or the lack thereof, if it closes weak, we're going to have continuation patterns. And so what's a continuation pattern? Well, that's when you don't get a rally up into minor resistance where you could have got a setup down here, but rather what we get is something like that. I don't know where it's going to close, but something like that. I mean, so because this is gapping down here, well, what if it rallies from the open and comes up to that resistance and forms a topping tail bar and then comes back down like that? Even worse. So continuation down into the void. So a thought as far as today goes. All right, let's clean that up. And I'll get to it, but very interested to see what the Qs are doing here. And of course, SMHs and how tech that's been showing relative strength, what happens with that by the end of today. So looking at the futures, there is what we'd be looking at the end of the day as a continuation pattern. And so here's a move up, wide range bar. And that's another sign of weakness because you had a wide range bar coming off of the low, which its implications were, hey, that thing can get a bit higher. And it went right back down again with a wide range bar. And now here we are with this mess, and we'll see where it ends the day. But so far, it can't bounce. So this is one type of continuation pattern. I can stretch it. This isn't a complete red bar on the side, but you got two bars here, and we could kind of fudge it and say, hey, that's a bull sandwich if it closes that way. It's only 9 o'clock, so we got to see what happens here. So far, we do have some support there. Right? Okay. All right. All right. So SPX, our routine. Jake has provided me with 37.35 and 39.50. Last I looked, there was juice at 37.05 and 39.55. Things change. 37.05 is 70 by 80. If you go for 37.35, very nice, very nice. 145 by 160. And so let's see where that's at. So what I did here, right? The average range is, now that they're expanding, is about 80 points. So one of the things we have to look at here is kind of where it starts the day. It's already down 80 points, right? It's already down 80 points. So if we drag this down, right, scrunch that up a little bit, we know it's down around here, the open, because we looked at SPY, right? And if I drag this down here, give or take, we go down here, and that puts us at around 37.48. We look to the left, pivot low. Okay. Right. Part of this has been tested already, but we're looking for probabilities of moving a certain amount. Now, from yesterday's close, don't count the numbers, I'm just spitballing here, would be about 160 points down on SPX, big time. All right. So 37.35 per Jake should be okay, but 37, let's call even 37.10, 37.15. That's no brainer area. And you look at the pivot low to the left over there. That's no brainer stuff. Like, take my words with a grain of salt, because one day there'll be an Armageddon, but just on a day-to-day basis, just based on what we're looking at, it's highly unlikely prices are going down there today, right? But so don't crucify me if it does, but you're responsible for your own stuff. All right, so now it's here. And now now I'm just going from the open and 80 points up, but we're not at the open, we're gapping down. And if I drag that down here where it is, it would put a possible move of 80 points from where it's trading now. You'd at a minimum, and you might sweat a little, you'd have to be above 39.60. Right. So Jake's got 39.50, which a little tighter around the neck. And if you can go to, I got 39.55. So things get juiced up when prices are going in a direction, and the direction is down. So the bottom, right, that people are paying for crash protection. And so as people pay up, I think, option traders, Dan has used the analogy, hey, your house is on fire, or the house next to you is on fire, and you want fire insurance. Okay. What's your house worth? $500,000? It's going to cost you $450,000. What are you willing to pay when the house is on fire for that insurance? And that's what we're looking at here to say, hey, and we're looking at the charts and saying, what's the probability of the fire catching our house at the levels we're talking about? That's what a credit spread is, right? That's an essence of a credit spread. So the further away you can get based on the technical analysis that is being explained here, the more the odds are in your favor. So that's the reasoning behind the selections. All right. NASDAQ been showing relative strength. Fantastic. That's the silver lining in all of this, where institutions are now warming up to what's been cratered. Right? Interest rates drop, good for tech. Maybe it's not going to outperform today or tomorrow. And they feel that, hey, Apple and Microsoft aren't going out of business. They might drop another 10%, but they're okay with that. So, but now we got this reversal down, trading range for the moment. You can see it stopped here at minor support. Looks like it can continue lower. Right. Russell, risk on, risk off. Obviously, risk off. Right. Small caps, tech, get the hell out of the way. Now I'm not so keen on continuation patterns that fall so precipitously like that, but especially with wide range bars, and it is on support, so it's not the ideal scenario. And but if everything's going down, maybe that'll just go down less. The Dow, I don't think that pivot's holding. I mentioned that already. The way things came down like that, I think when this thing is all over and done, we're going to see the Dow down here into this void below somewhere, and just look at it on the weekly chart without any words on there or squiggly lines. There's just nothing to stop this from going down. Nothing. And here's the cash Dow, and you can see, so I don't know where this is because it doesn't update, but it must be lower. And big nasty bar. Things should go lower. So, have some powder dry cash. There's going to be a big opportunity. It's coming. It's coming. We've been through this before. So we look for all markets participating, whether it's up or down, and transports moving lower. That's bearish. Everything else is bearish. What's going on with interest rates now, right? So they're going down. People buying bonds, like the safety, recession, call it what you want, right? But there's all this uncertainty. It hasn't broken here yet. But so things will likely tend to continue to be erratic. What's the Fed going to do? They wouldn't dare raise interest rates with what's going on. And then we had this reversal back up again. Now they're coming back down. New bank, Credit Suisse, and others. So the Fed is getting thrown a curveball. They're trying to figure out what the hell to do also. But hey, I'm sure that, they're going to get some signal from the White House, some shining light that's going to guide them to the end of this rainbow. Right. Gold has to be moving up. Well, that has to be moving up. I think it's more that flight to safety there, but the dollar, what's the dollar doing? Dollar's popping back up again. So a lot of moving parts here. Silver moving up here. So for day trades, maybe that momentum continues. It's up against the 50 and this resistance there. Yeah. Fed manipulating the market or other way around. Well, I think whether it's the Fed, the White House, they probably have a little red phone on their desks or walkie-talkies that are, and they kind of come to some conclusion as to what to do. But hey, that Bostic thing a week ago, that was some kind of manipulation with his essay or whatever you call it that was up there. Then the next day he rescinded from it. Maybe they knew what was coming. Right? They probably did. I mean, we got to believe that these guys have inside information and they know what's going on. So maybe they knew what was coming with this banking debacle. They wanted to lift the markets up a little bit so they'd have more room to fall. I don't know if they play chess or checkers, but if they're playing chess, maybe that move up and that Bostic move was manipulated. I don't think we're ever going to know because they ain't going to tell us. I know he's not a voting member, but he has an influence, FT. That thing he wrote about being more hawkish, the market dropped. Then the next day he comes out and says, oh, quarter points, okay. Market rallies like a son of a gun. So obviously the guy's words matter, whether he votes or not. So, all right. Oil down and breaking the lows now. More bearish stuff. And it is what it is. I mean, Bitcoin here, I guess people worried about the markets. They think Bitcoin's safe. Yeah, we talked about that yesterday. So seems a little odd, but and you see what's going on here? Turning positive, right? Positive above zero yield curve 5 versus the 30. So liquidity is coming in some way. And I guess they have to do that, but we ain't out of the woods with this yet. And so we'll continue to monitor it. Volatility index, set your alert up here because on a sell-off, that's what we do, right? These have been where the VIX has turned back down again. Now, if this is truly some kind of financial meltdown expectation scenario, it will probably get above that, but it hasn't been above that in a long time. So initially set your alert here and we'll get ready for the day. Well, yours, Dan.
Good morning. We said, or I said, I didn't think we're anywhere near the end of this banking stuff. And I still think we're going to have many more blowups. They just come in different flavors. So Credit Suisse here today is the new flavor of the day. I think it, just based off my recollection, was right around here on this breakdown, or maybe even on this gap down. I said, this looks horrible. Daily, weekly, monthly. I said that's telling me there are problems with this bank. I didn't go so far as say contagion. And then also with SIVB this day, on this day, in the green room, I was shaking my head. I was talking all day, this power downtrend. I said, this looks like it might go out of business. And I had no idea it would happen that night. Didn't even reopen. That was Thursday night. Friday, it didn't reopen. So that, I'm watching KRE. I watch anything that moves a lot up or down as opportunity, as a contrarian when they're climactic. It's an igniting bar, obviously, and I'm looking to trade with it. We had a put spread on KRE and RH that we took our profits at the gap up yesterday, and I mean, hopefully this swan dives and makes a new low, and we'll put on some new trades. YouTube asking about F Wonk. Yeah. It reminds me a little bit of Alpha India, 100% retracement. Yeah, I like it. Relative strength, close at the high, bottoming tail. Let's see where it opens. All right, so AI, we're actually in that. I mentioned him, and questionable close, gapping down here. I'll keep an eye on it. Like Charlie Papa. So remember, whoever did it with me, I gave it to subscribers. We shorted the $65 puts. And just because, I mean, and I said, so like, hey, this is a bearish pattern, but look where the 65s are at this prior low from October. And there was some pending news about an approval. So we posted that as being some gap risk also, but you know, let's bid a nickel and get out of it. Yep, Thomas LBS is on my short watch list. Yep, the alarm already went off, so we have to work an entry. I see Q's bouncing right now a little bit. So whenever you get large gaps, you know, some people just like to trade in that direction. But unless it's an igniting gap, it's not that easy. But this was a fantastic new setup. There's, you know, we got different flavors of continuation patterns. Today, MT Live will be kind of dedicating a big part of it to reviewing your trades and scanning and stuff. But yeah, this is a new trade. The entry was yesterday's low. So you know, let me change it to 5-minute low because I, you know, surely don't want anybody don't want anybody doing it you know, right at the open. Who doesn't know our rules? So yeah, LVS is on my list. NEM. Yeah, this one's actually lagging, but that's a 1, 2, 3 with a void. So yes. Here, let me show you one. Actually, McGraw sent me yesterday. McGraw hasn't been in here very much, but he sometimes just gives me trades from stuff he follows. And you know what, Greg? A service of his told him to buy this over yesterday's high as a breakout. That's just insanity. You know, we were down here with gold and GDX at the double bottoms. You know why? It's mind-boggling to me with some people's methodologies. But yes, so kind of the side comment of that is if you wanted a gold stock, this one is superior as a new trade than WPM, although WPM is stronger. It's moved too much. All right, let's see. All right, so these other banks, you know, other European banks are going to get whacked. Look at that breakout failure and big old price void. That's gapping. Wow, that's gapping all the way down here near the 200. Wow. Look at this volume. Do you think they knew something was coming? I sure do. That's what that chart says. 33 bucks. That still looks like it wants to go to the 200. Deutsche Bank 200. Yeah, they're having a bad day over there in European banks. GES. I don't know if it was actual earnings or they just came out with a pre-release. But this is a big old gap near the 200. We'll come back to it. Lennar had earnings. We actually traded this the other day on that. I had a little nice day trade in that. Today's a Wednesday. I like Monday's gap reversal. I like yesterday's gap closing breakout. So that looks great. I'm going to put that in a window. Other computer. If there's any juice, it'd be a no-brainer put spread. Otherwise, I'm going to watch it directionally. Lulu, I forget what their news was. We did a nice call spread on this the other day. Beautiful breakdown. This is a great example of using your moving averages as trend following and what this stock is doing on short, intermediate, and long term. So I'll watch that for a bounce to sell another call spread. DFS had some news about, a couple of these banks were gave news on rising delinquencies on credit cards, which does that surprise anybody? You know, delinquencies, I've been talking about these used cars. Delinquencies are way up. The economy slows, people are out of work, inflation. Of course they're gonna go up. You're in a friggin' cave if you don't come to that conclusion. It's just a matter of, like everything else, is it more than what was expected and priced in? But you know, and insurance companies have gotten whacked with this down you know, the regional bank problem. 1530 bullish gap, but no pattern. SMAR bullish gap, no pattern, but it might be worth a controlled pullback. I'll keep that one on my list. Otley, I liked it this morning when it was up at 240 at the top of the range, but look now, it gave it all up. 100% give up, so I have no interest anymore. This nice little retest, double bottom, gapping up to 239. You know, nothing to do, but I'll keep an eye on it. Midla looks like, look at this, that's a SPAC that just cratered when it was released to the public. We'll come back to it. It might be the start of something here. It's going to be a big igniting bar. You know, Greg mentioned these cruise ships and you know, jets a while back being weak. All right, look at run here. Shoot, it's tanking already. Look at the middle chart. But this still looks lower, but I'm gonna keep an eye on this. I'm gonna set an alarm at $8.10, because then that would be a great climb-o. All right, we're bouncing here a little bit. All right, so run is messing up my entry. All right. You know, I was tempted to nibble on that into the close last night because that is a beautiful daily, weekly, monthly bearish new setup breakdown. But you know, I didn't want overnight risk. You know, I said we're kind of in landmine territory with all this banking news, and it's a personal choice, and I prefer not to have overnight risk. All right, this Charlie Papa, I am not filled. So let me see where the quotes are, because I didn't hear a bell go off. They're not open yet. It's 50 by 75, that's why. Wow, the Charlie Papa, the $60 strike has an open interest of 20,500. So again, I don't know if that's somebody betting that it's going to have a catastrophic gap down, or if it's a hedge fund like us saying it ain't going there, and they sell it to make good premium for an out of the money